The DomaCom fund can simply be described as a brand new type of property trust, one where it comes with very special legal permissions and technology layer as well that enables investors to come in and select which property they wish to invest in and how much. And the technology layer is a bit like realestate.com marries E-Trade, is the way I would describe it. So yeah, so we're a very special type of property fund, property trust. Fractional investing is not new. A lot of Australians do it every day, and at the moment we use fractional investing concepts to invest in companies, and we do so via the Australian Stock Exchange and other exchanges. So the concept here is that instead of trying to put all your eggs in one basket, you spread it across a number of investments. So all we're doing is applying equity concepts to the property market for the first time, using a legal and technology structure that enables investors to buy fractional bits of specific properties. Well, not directly properties, but sub-funds that relate to one property. So if I buy 10% of the units in one sub-fund, I'm buying 10% of the economic interest, in other words, rent and capital of the sub-fund that I chose. As everyone's aware at the moment, property is a very hot topic, and trustees are being approached left, right and centre by property spookers or developers. Also, trustees themselves like property because it's a real asset, an asset they understand and an asset they can feel confident will exist tomorrow and the next day. So really, advisors need to be able to provide a solution for their trustee clients. Now, at the moment, they can't advise on physical property. The only thing they can do is advise on managed funds or property trusts or REITs, and the issue I have there is that self-managed super fund investors, they've gone all the effort to create a self-managed super fund to pay trust deeds, to move their funds from corporate super or industry funds. If they were after a pooled investment vehicle, they would have stayed in corporate super. So they want transparency and control, and this structure gives advisors the tools. The DomaCom fund is targeting the self-managed super fund investment market as our launch market, simply because we provide a solution for SMSFs that doesn't require leverage. As has been widely commented at the moment, the only way an SMSF can buy a property is to buy it outright, and most SMSFs, the median balance is $530,000. Well, you can't really buy much property for that, and if you do, you're using all of your assets to do so. Now, from a portfolio theory perspective, it's incredibly risky. You'd never do that in the equity world. You wouldn't put all of your portfolio into one stock, and that's what they're doing. So what we are offering SMSF trustees is the ability to put only their asset allocation need, which say in a $500,000 super fund would be $100,000, and put it into not just one property, 10. And the idea there is we're using a thing called diversification to manage risk. And the idea is you can have $40,000 in residential properties across 3 states, $40,000 in commercial properties across 2 states, and several industrial properties. Now, what's the chance of all 10 properties being untenanted? What's the chance of all 10 properties and geographic segments being down? And that's the power of diversification, and that's what we're offering trustees. There's a number of advantages to investors and their advisors. The first, is the fact that the effort of becoming regulated is quite substantial. I had 14 months of quality time with ASIC. The corporate governance, the due diligence, the compliance are quite strong. That's what it means to be regulated. And in our case, it involves having a responsible entity, which is a market leader. Perpetual is the responsible entity and custodian. So in other words, the assets are safe. There is a very robust and compliant process within DomaCom that is checked by external people, including the custodian, the RE and auditors. So it provides that comfort. The other key comfort for advisors is that by being a regulated fund is that they can advise on it. We fall within their APLs, their approved product list. So there's no point creating a fractional property solution that people can't use. So that's why we've taken nearly 3 years to get here, is to create a regulated solution that advisors can use within their business model. The real gap comes from my background, where my previous business, we had 18,000 self-managed super funds, and the thing that I noticed was that the majority of those had zero weighting to property, and a small percentage had 10% weighting, 100% weighting to property. Now, clearly, if you believe in portfolio theory, that is wrong, and that's really symptomatic of the problem with property, which is the high transaction size relative to the average value of the portfolios in SMSFs. So that's the first problem we're trying to solve, is to provide an asset class solution for the SMSF market so they can invest in property without overextending themselves using debt, which is what they're doing now. So if you believe in portfolio theory, the problem is it's been exacerbated, because I hear examples of where a $200,000 super fund borrows $400,000 to buy a $600,000 property. Well, what's that done to that super fund? You've now had a 300% weighting to property. That can't be good from a risk perspective. So we solve that problem. Now, the other problem we solve is that the advisors, as I illustrated earlier on, can't advise on physical property. So we give them a tool that enables them to advise on something that simulates investment property, and also provides them a defence against the property spruikers who are challenging their clients and really exposing them to risk. So the advisor can use our product, to solve that problem. I get asked quite often that, where has this been done in the world before? It's as if, we've got to be validated by the fact that someone else in the world has done it. There's actually been a number of attempts globally to create a fractional property solution, but they failed, and that's because they haven't gone, and my view is that because they haven't tried to use a regulated structure. So that's the first thing, is that, we've done something novel here, and we are the fourth largest pension market in the world, soon to be the third. Apparently we're going to overtake Japan. And frankly, if we don't have the capacity to create new products, who does? We brought wraps to the world. Well, we can bring fractional property to the world as well. So that's the other thing I'd like to say, is that innovation can happen here.